Good morning, everyone. It's Melissa with Price Plan Profit. We're going to get started this morning for our weekly session where I'm going over the potential swing trades for next week, as well as just doing an overall market review and what I'm expecting for this upcoming week. I hope y'all are having a great Saturday morning. I am. Put a brisket on for last night. It's been smoking for, golly, 10 hours now, 10 hours. And I'm excited to eat that for dinner tonight. So I'm going to start as I always do. I want to be aware of economic data that is being released, the planned economic data for next week. So let me bring that over here and let's look at what we have planned. Now, I do not stay out of a trade or take profits on trades getting out if it's not part of my plan just because there's planned economic data coming. What I use this for is simply to be aware of when the planned economic data is coming out and expect some volatility around that. On Monday, we really have nothing. Tentative Cleveland Fed inflation expectations, and that is really it. So no data on Monday. Then on Tuesday at 8:30 a.m., this is a more impactful report, and it's CPI report on Tuesday, the 12th. Then we have some Fed speakers that day. Baskin is speaking, and then the federal budget balance at 2 p.m. Eastern Time and API Weekly Statistical Bulletin after the market closes there. On Wednesday, our planned economic data is Barkin speaking, then crude oil inventories, then we got Goldsby speaking, and Bostic again speaking. So that is the data for Wednesday that is planned. Then on Thursday, PPI, core PPI month over month, unemployment claims. Looks like Tuesday and Thursday are going to be the most impactful potentially earlier in the week. And then on Friday, core retail sales, Empire State Manufacturing Index, some import prices, lots of stuff. And then at 10 a.m. on Friday is consumer sentiment and inflation expectations. So, more going on this week or this upcoming week than what we experienced last week. Now, we are in the heart of earnings season, so it's always good to know what names are reporting earnings. That way, you are aware if you're in any of these positions and you are comfortable holding them through earnings. I say go for it. For my long term stuff, I hold through earnings, four of them every year. And I am fine with doing that. For swing trades, I prefer, because I buy straight up calls or puts, I prefer to not necessarily trade straight up calls and puts around earnings. I wait until after that report comes, find my buy or sell zones, and trade after the earnings reports are released for my swing trades. So, the names that I am seeing here that I trade is BBAI, Big Bear AI, traded that last month, made some money. Oklo is reporting, of course, AMC, meme stock, and then it's been nothing since. ASTS, I trade that one, have traded that one this year. Archer is also reporting. Plug, I used to trade that, not anymore. GoPro as well. On Tuesday, not a lot going on before the bell, but after the bell, core weave. This is a big one. RGTI Kava, one of my absolute favorite go-to DoorDash choices is Kava. Love that. I do have equity in that name, but I'm sticking it out. Then on Wednesday, not a lot before the bell that I personally trade. After the close, Cisco, this name is actually on my watch list for this week. And I will wait until after earnings to see if Cisco has dipped down into my buy zone to potentially then take a swing trade. But it would have to be with a dip on earnings for Cisco. Other than that, on Thursday, you got John Deere. That can move the industrials. It looks like Advanced Auto Parts. Don't know if anyone trades that. I don't. AMAT, Applied Materials here, have traded that many, many times. They are reporting after the bell on Thursday. Then nothing, and Friday is typically a very, very slow earnings day, so nothing going on Friday. So just be aware of when those earnings are releasing, and if you are trading anything, you need to know that earnings are coming up. So now let's look at the ES futures charts from a weekly time frame. This is last week's candle. We had a dip early in the week. It was a buying opportunity. The dip actually occurred Thursday and Friday. And then we came into the markets in a weekly buy zone for me. And you can see the price recovered last week about 100, 200 points. So a nice rally last week. All we did, though, is basically engulf the body of the week before. So, on a daily chart, this was an area that I talked about in the trendy room at Simpler Trading all week or all for several days here. We had that big rally candle on the 4th, and then the next 3 days just basically chopped right at the top of this rally candle. We did get a pullback on the 5th, but that pullback brought price. If I just measure that rally candle, it brought price right to the golden Fibonacci level, the fifth for me, the 50 fib. So it came back 50% of that big rally candle, and you can see that buyers stepped in. That is why I love to trade the 50 to the 618. It just happens that buyers step in typically in this area. Now, this level, right, has been tested now twice. So be aware of that. That on a pullback next week, this level is not a fresh level and it could be broken. All right. So then on Friday, we got the big rally candle out of this formation, and we basically chewed through this big topping wick, which is selling pressure from the day before. Now, you do have supply up here at 64.35 and a half by the all time high of 64.68 and a half. That is because these were all inside candles, and this was a breakdown candle. So I will be aware that at 64.35 to the all time high, I'm going to meet some resistance selling pressure in there. As far as the 4-hour chart goes on ES, it's going to look very similar to the daily chart, the 64.30, 64.68 and a half. As far as the buy zone on the 4-hour chart for me, 63.79 by 63.34 would be that first one. And then back down here at 6,300, that was created from the drop Thursday and Friday, we printed some inside candles and breakout candles. This would be a key zone for me to watch next week if there is weakness in the market and this zone is taken out. So 6,300 to 6239 and a half is the key buy the dip area for me next week as far as my swing trades go. It's always good. I always like to know where the S&P 500 is when I'm getting ready to get into or initiate a new swing trade. All right, now let's look at this weekly candle on the Nasdaq. Big, impressive, almost back up to all-time highs. A perfect bounce right here off of the 9 EMA on the weekly chart. A perfect bounce off of this demand zone. Last week's candle brought us down to that demand zone. And then this week, meaning Monday through Friday, we rallied right off of there back up near all-time high. This all-time high represents resistance, okay? If we go up and touch this all-time high, the initial reaction I'm expecting is some resistance, and we could get a slight pullback. Let's look at it on the smaller time frames to find those potential buy zones. All right? So on the daily chart, again, here's your all-time high. That is the resistance that we're expecting 3 days up after coming back. And I can measure this candle, but I can tell just by looking at it that it is going to be that key golden pocket as well, which it is. And we bounced right off of it. So nice job if you were able to buy this dip down here. I did buy the dip last week in HIMS and NVIDIA on this time frame. So here we are, 3 days up now, coming into it, resistance in the form of the all-time high, a pullback all the way back to the body of where this little rally began. Would be a key area to watch on the daily chart for me. That buy zone down there uh, for the golden pocket is down at 22845 by 22,582. Now, if we dip back down there, you can see I have trendy edges up here representing a playing field of supply. I need to be aware that if we get a pullback either to this first key level or down into this buy zone, this now becomes resistance, these upper trendy edges, a weekly edge and a monthly edge. And I would expect selling pressure between 23,661 and 23,845. On the 4-hour chart, we are getting very close to what is a 4-hour supply zone. We saw it on the weekly, the daily as well. We know that that resistance is there. So I'm going to remove this Fibonacci because we teach in the trendy room if price can get above the 618, that would be the 618 of this down move right here. Measuring that, we teach that there's an 85% probability that price is then going to come up to the 887. Then, if we get above that 887, 95% probability we will take out the most recent high. And for the NASDAQ, that would be the all time high. So, the way that this looked this week was on Wednesday, price got above that 618 level. That is when we talked about in the room the 85% probability the price was coming up to the 887. And you can see here just by using that strategy that you could have made over 300 points on the NASDAQ just trading the fact or the strategy of price above the 618 leads you to the 887. All right. All right, I'm going to go ahead and remove those fibs because we accomplished that task. Now, on this 4-hour chart, we did create inside and up candle formation. So I'm going to extend this zone up, looking for buyers to step in at or around 23,533 and a half this week. And then if this zone breaks, this is my next buy zone, followed by the lower weekly edge down here at 22,928. All right. So now that I covered the ES and the NASDAQ, you can see that the overall trend in those two indexes is to the upside. I do want to take a quick look at the Dow because it's been lagging behind. Last week, we created a new all time high. This week, we definitely did not engulf the body of last week's candle like we did with ES and the NASDAQ. So you can tell that the Dow is lagging. That means that more than likely the financial stock struggled a little last week and could not keep the Dow in sync with the NASDAQ. So we did close this week, though, just above that upper yearly edge, which is a positive sign. We came down into the EMA cloud on the weekly chart. So it doesn't look bearish by any stretch of the imagination, but it is definitely weaker. So those names in the Dow, you have a less probability of follow through than the stronger names that are in the NASDAQ. Okay. All we're doing here on a daily chart is chopping in the body of this candle from August the 4th. Above here would create an inside and up. Below here would create an inside and down. My buy zone, if we create an inside and down on the Dow, is 43,292 by 42,896. And my sell zone, if we create an inside and up on the Dow, is 44,758 by 45,312. All right. All right, now let me talk about the outperforming sectors in the market right now. Looking back over 3 months, 1 month, 5 days, doesn't matter. The leaders are the leaders pretty much in the market right now. The an absolute killer strong sector here in the market right now, and I'm going to remove, I don't really use this chart. I don't trade XME itself. I choose names that are in that sector. So you can see that since April, right? This thing is up, up, and away. This is a daily chart. All pullbacks to the daily EMA cloud have been by the dip opportunities in the metals and mining sector. We're creating new all time highs. It is just very not new all time highs. Sorry. We're creating new recent highs, but it's just very bullish, even on a weekly chart going back to April. This sector has had a few pauses along the way, and last week was a by the dip opportunity in metals and mining. And then this week, boom, off it goes. As far as on this weekly chart, which is since we are coming near new or coming near previous all time highs, I want to know on the weekly chart where that supply is at. And I'm just going to go from this high, extend that line off to the left, and then I just go back for years. I mean, we're already in 2016, 15, 14, 13, way back, way back. And there is the price action above the most recent high. There's your all-time high on metals and mining at 96.09 up here. I'm looking for that inside and down candle formation. This is going all the way back, guys, to 2008, believe it or not. So here is the supply zone on the weekly chart above where price is at. We got about $6 or so, 5, $6 that price could move before it hits this supply zone from 17 years ago. I am looking at names in metals and mining for a potential swing trade. But for me, of course, it would have to be a dip buy. So some weakness in here in metals and mining and those names that I have on my list would be a good thing for me. I can see for metals and mining on the weekly, the EMA cloud is at about 7207. I want to create an alert there because in the event that the names I'm watching do not come to my triggers where I have them set at, but the sector itself comes down into 7207. I want to know that because those outperformers, I want to see if they are in a buy zone that I could go ahead and trigger a trade to the upside. So there's an alert there. If that goes off, I will know to look at the names I'm watching. And let's talk about those names. First up is MP. Now, I'm not a breakout trader, so to speak, especially for swing trades. I like to buy the dip in strong names, and MP needs a dip before it's a buy for me. On the weekly chart, and I'm not going to trade off this weekly chart necessarily, but on the weekly chart, I can see for MP that level is right down there near 63.63. I'm going to create an alert slightly above there just so my attention is drawn to that name when that alert goes off. Now, on the daily chart, this is the chart that I would trade for this name. The zone I'm using is the lower weekly edge here at or around 64.84. And then I would add to the position down here at the monthly edge at 61.76. And then my stop would be a candle close below this inside and up candle formation at 59.20. So that gives me a risk of about $5.50. And as far as the reward goes, my first trim is up here at 72.05. The way I found that was like this. I'll just show you. Here is the most recent high on a pullback that I am looking for. If price comes down to this 618, I have a trim right there at that 50 fib level. All right. That's where I set the trim for this name. So that is over $7 of a reward there on a $5.50 risk. So that would be my first reward. Then I'm looking for the upper weekly edge and this recent high, and then up or all-time high. And then above there, still in the trade, I have Fibonacci extension targets for higher prices. All right. All right, so MP is on my watch list. There is my alert in the event we get that pullback. I will be waiting for this. Point out you do have inside candle structure right here. So there is a possibility that price just pulls back here, which is a couple of dollars above my trigger. But if I get an alert on XME, if it's pulled back, and MP is down here in this area where I have a couple of confluences of support, then I would go ahead and initiate the trade early. I would not trim here because price would have not come all the way down to my buy zone. This would be my trim. So if I'm initiating the trade at about 67 dollars, right? A little early. I would do half allocation here and then save the other half for this buy zone. But my first reward would be about $10 above. So I would still have better than a one for one risk to reward. And that just explains kind of when I would enter a trade a little bit early. And if I do, then it is with half my allocation and saving the rest for my original buy zone. All right. So that covers MP. Some other names in this sector that I have an interest in is UEC. Looking at this first from the weekly chart here, all-time highs. You got a beautiful buy zone down here at 867 by 770. I want an alert there just above. This is a cheaper, like it's, a $10 stock. I will trade $10 stocks in strong sectors. Okay. I like this for a buy. Now, as far as time to expiration, you have a monthly ATR of a dollar and a half to $2 here. And let's say I want to target the 100% move that we have had over the last month. All right. That is all the way up here, let's say $14. So if I'm buying at 867 and my ultimate target is $14, I know that I need a $6 plus move. So $7 plus move. Well, that means I need to buy 3 months of time. So looking at UEC and buying 3 months of time, that would put me out into November or December expiration in this name. Okay. So, number one, I would be buying down at or around $7 to $8, right? I like to buy at the money. I need a liquidity in the name on the date that I'm choosing. And I looked at the option chain last night when I was setting this plan up, and December is where it's at. So on UEC, this would be a longer term time of swing for me, buying all the way out to December in this zone and then trading back to the current all-time high and then these Fibonacci extension targets. So I do like UEC and would be interested in taking the trade there. Next up, I want to talk about Newmont Mining. This name is in two hot sectors right now. It is a part of XME, Metals and Mining. It's also a part of GDX, the gold miners. And both of those sectors are very hot right now. So this name would kind of cover both. The buy zone on the weekly chart for NEM is here at 63.13 to 58.97. On the daily chart, that zone is 61.51 to 55.37. You can see it's been on a tear, right? It's very bullish. A pullback into this zone would be a buy the dip. You also have a zone right here at 63.15. But if I were trading that zone, I would go to a 4-hour chart and I would use this 4-hour zone. So when I go down in time on charts, then my expectation for the amount of time I'm going to be in the trade goes down. So on a 4-hour chart, I'm looking to trade this anywhere from 2 days to 10 days. On a daily chart, I'm looking to trade this at minimum 2 weeks to 2 months. So my expectation for length of time in the trade goes down as I look at the smaller time frames. So just for a quick trade, couple of days, maybe all of next week, this would be my buy zone. Then I would be trimming at these levels and targeting this zone from the higher time frame charts. All right. So that covers XME. Now, I mentioned GDX is also a hot sector right now. It is definitely outperforming the overall market. It looks great. Okay. I have on this weekly chart this area of consolidation where gold miners sat and consolidated from the end of June till this week when it broke out. So I would be looking for a retest of this consolidation area to trade GDX. Then I'm going to set my stop at a candle close on the weekly chart below this consolidation area. If I get a close, I simply stop out of the trade. You can see that is about, let's just say it's a $3 risk there. My reward is 5 and then 10. $12 to the upside. So it has a good risk to reward. On a weekly chart, though, I'm planning 3 months max, okay? Or 3 months minimum, I should say. So that means that I am looking out for GDX again out to those December expirations. And I like to trade at the money, and I can see there is plenty of liquidity regardless. So if price were to pull back to 53 to $50, I would be buying at the monies or very close to it up in here, right? This is the strike that I would be buying. Now, these won't be the price of them for the December expiration because as price goes down on my chart for me to buy the dip, the at the monies will change. And so I would be expecting to pay somewhere between $4 and $5 a contract when price comes down here, then trimming and then targeting. All right. So that's a trade that I would plan to be into December. Well, what if I only wanted to trade this until the September expiration? Then I would use this daily chart, and it really doesn't change much except that I would have a little quicker entry here using the lower weekly edge. And of course, my target wouldn't really change because this is the supply above where the most recent high is. So that would still be my target. Just the length of time to expiration would change on this name. On the daily chart, if I were trading off of the daily chart and only wanted to be in this, let's say a couple of months out to October, I would look at those expiration, those contracts, again, buying somewhere near 50 to $53, and I still have the liquidity that I want. And you can see 2 months less time to expiration, the at the monies are going to be a couple $100 cheaper. All right. So that is the idea with GDX. I do want to have an alert here so that I know that price is coming into my area that I'm interested in buying the dip. I like the longer to expiration trade, but if you're not into that and choosing December expirations on something, then go ahead and choose the October and just know that your first area of resistance is going to be the upper weekly edge here at or around $58. Okay. And getting in somewhere at the monthly edge and weekly edge double stack right here. All right. I would still use this as my stop because this consolidation area I expect to be support. On weakness, it might pull all the way back to the bottom of this chop area. And I don't want to be stopped out if price is just going to turn back around at the bottom. You got to be okay with the risk. So that covers GDX. I do have an alert there and I'm interested in trading it. Up next is going to be home builders, ITB. That is another hot sector right now, doing very well. As far as names, there's only a couple that I would be interested in trading on ITB. I want to point out something very important. ITB has this is a bearish golden pocket. I showed you on ES and NASDAQ how the bullish golden pocket worked so well for support. Well, the bearish golden pocket measuring from that all-time high to that swing low, that's where price is at right now. So actually looking at this, I'm like, okay, maybe I get a pullback on ITB because we're at that bearish golden pocket on the weekly chart. So if I go down to my daily chart on DR Horton here, where is it that I'm interested in buying this dip? On the daily chart, a trade that I would be in for a couple of months, I'm interested in this area right in here. Okay, we had a gap up. If you want to trade the gap and make your risk $9, then you can trade from the body of this candle, 147.20, or wait for a gap fill back down here at 143 by 138.72. That is a risk of about $4. My initial trim target on that risk would be up here, which is about seven and a half, $7 and some change up to no, $8, sorry, $8 up to my first trim target there. And then this is my ultimate target in the trade, 157 and then 163.13. So you can see whether you take the trade from here and have a $9 risk, right? If I take the trade from here, I'm not trimming here. I'm just targeting here. And that's at the bottom about $10 and then about 16 at the top of that zone. So it's less favorable risk to reward, but you might not get the pullback to this more conservative zone down here and the gap fill. So you trade it how you what your trading personality is like. If you tend to be more aggressive, you go for the trade from this level. If you tend to be more conservative, like I am, then you're looking for the gap fill level. That daily 21 is lining up there as well. So DHI is one name that I would trade in ITB. The other is Pulte Homes. Now, remember that so let's say the Fed actually cuts rates in September. That's good for home builders, or it should be, right? Lower interest rates, more homes being built, more buyers stepping in to finance a home. That should be good. Pulte Homes has a very nice weekly squeeze on the weekly chart here. It has a established weekly squeeze. You can see it is a beautiful rounding bottom or cup and handle. I would be looking for a slight pullback, right, to trade that cup and handle. And these would be my targets to the upside. Now, let me look at the smaller tr- uh, day trade, geez, daily chart and find an area that I would be interested in buying a dip on here. Here is the inside and then up candle formation. Now, obviously, this zone has been tested. It has been tested when, as soon as we gapped up there, price came back and it sat in here, and you actually got a little further pullback to these key EMA levels. And then it took off with a couple of days consolidation. And really, I would count this as a consolidating day too. You got topping wicks here. This upper weekly edge is resistance. But if you wanted to trade and just not even to the bottom of that gap fill zone, this is going to be about a $6 risk. Then your initial reward is only $5 to $6, but the ultimate reward would be about $8 to $13 up here. So a little, nah, I don't want to say less rewarding, but what I'm looking for on a pullback on the weekly chart, okay, is if this is our rounding bottom and you get this breakout, then you're looking for somewhere a pullback of 30, 23.6 to 38.2, somewhere in this bull channel here. I like that, but honestly, I really like this one. I just don't know that I get that before this squeeze here fires. So, two different zones that I'm interested in trading off of this weekly chart would be this bull channel at 116.84 to 112.71. What I really like better is trading the 38.2 to the 618. So that would be the bottom of the bull channel and then the golden pocket. That's going to be about $6 of risk, and then my initial reward is going to be up here near 124, which would be about $13 of reward on this weekly chart. This is the zone that caught my attention whenever I was looking for potential swing trades on PHM or Pulte Homes. All right. So somewhere around my zone here, 112.71 to 106. As far as time, right? I'm on a weekly chart, so I'm looking out further in time. And you can see going out to December, you don't have the liquidity really that I'm looking for, which means that it just isn't, you're not getting the buyers to step in that far out to expiration. So then I went to the Octobers. You still don't have the liquidity there. Going to September, it's a little light. I would like to see 500 or more. I'm getting 500 here, and more than likely on that pullback, I would get 500 here at the 105 mark. So, that's why I went back and looked at the daily chart near the 112 area. You can see that that is in this little weird gap down, gap up scenario at 115 to 111.50. So if I'm just trading it out to September, I would use this daily chart to trade it, and then I would look for, hold on one second. Sorry. And then I would look for a target up here of, right? Because we're going to pull back if I get in this trade. So my target's going to be 120.42 by 122.82, and then my sell zone up here at 125 to 130. Okay, so that would give me a risk of about $3.50. Would give me a reward of about $5, and then on up if I get that second target. All right, so this trade would be based on a couple of things: the weekly zone that I'm interested in trading, right? As well as this inside and gap fill or gap up formation, but just using this slightly less risk zone here to take the trade. Another thing I like about this, the daily 21's lining up right there. So that would be my Pulte idea for a potential buy the dip opportunity in a strong area of the market right now. All right, next up, let's talk about utilities. They're kind of well, they've been strong, they've been a leader, then they've not, and then it's just kind of been back and forth, back and forth. I'm going to look at D here. Look at that weekly move. It is screaming, but it is extended from the cloud. It has a long, all the way back, almost a year, it's been in a squeeze. The problem is right here, this supply zone on the weekly chart. Now, it came very close to being tested there, but a healthy pullback would be a pullback to this weekly cloud here. Price coming back here because we are extended from it. Looking at the daily chart, all right. That pullback to the weekly cloud brings us into this area of consolidation here, also a lower weekly edge here. So this would be my initial buy zone for a dip. And then this one down here on this gap fill would be another buy zone for me on a dip. So if I trade off of this zone, you can see it's about $1 of risk. The initial reward is $1.25, and the final target reward would be about $4.50. All right, so not bad risk to reward on this name, just trading this zone for a utilities play. Another name in the utility sector that I like to trade is Duke. Now, Duke has also been on fire, and this is all-time highs. That was a beautiful rounding bottom, and then you can't see it, but this candle was your pullback and opportunity to buy a couple of weeks ago at 117.50. All right. Now it's off to the races, creating new all-time highs. It also has a weekly squeeze. I need a pullback buy on Duke in order to get in. I put these Fibonacci's from this move right here on the chart for a reason. And that reason is it's going to offer me my pullback buy zone, which is this 50 and 618. Now I'm going to go slightly below there because I have a trendy edge right there. This is the zone that I'm going to pay attention to this week to buy the dip on Duke. Now, your lower weekly edge is about 50 cents above this golden pocket here. It is an area, if you're okay with adding 50 cents to the risk, it is an area that you could uh, get your bid in there. All right. I personally would be okay with adding 50 cents to my risk. That would only give me a risk of about $2, and my reward or my target up here is about $5. So I like that. Now, if we get a sharp pullback, say on Monday or Tuesday, this candle formation is going to be an inside and down. So I need to know that this target up here will not be my first target. So if we get something that looks like this and we come down here, that means that this is going to be my first target. So I need to look at, is that at least a 1 for 1? And it is. It's a $2 risk, $2 reward to the first target, and then the second target is better. Okay. So just all these things you got to keep in mind. You got to imagine what you're looking for and then what the formation is going to look like up here. And does that create an area that I need to trim? And to answer my own question, yes, it does. But it still gives me a 1 for 1 on the first target and then a better than 1 for 1 on my second target. So that is something that I will be watching for Duke, and I'm going to set my alert at that lower trendy weekly edge right there. All right. And then the last name that I watch in utility sector is Southern, SO. Okay. This was on my watch list for last week. I just didn't get the pullback yet. So I kept it on my list for this week. It's doing nothing but consolidating here. I still have my alert set. I'm still interested in the trade, trimming at this 96.16, which is an upper weekly edge, and then looking for these extension targets on SO. So this is still on my watch list, and I still have my alert to get into the trade. Right now, this daily 21, this daily EMA cloud, it's all acting as support. I just need a quick dip. That's what I need. I didn't get it last week, but maybe this week. So I'm keeping Southern on my watch list. All right, next up is SMH. Semiconductors have been hot all year, really. They've been perfect by the dip opportunities on the lows from April. We took advantage in the trendy room of several of those names. And so now here we sit. Now, AMD's already reported earnings. This was that earnings report, and it recovered all that it lost there. Okay, here's where the report came out. It gapped down, and then buyers stepped in. Okay, because this sector is super, super outperforming right now. Buyers stepped in. So AMD is one that I can trade. Now, keep in mind that Broadcom and NVIDIA still need to report. Okay, their reports, Broadcom reports on September the 5th, NVIDIA reports on August 27th. AMD's price can be affected by those reports, so be aware. Right here, right now, AMD is not a buy the dip for me because, because it's at resistance. This zone has been tested multiple days. The zone above, my target zone above, if price can get above 182.50, then I'm looking for 190.65 and 203.55 on AMD. A buy the dip opportunity just off of a lower weekly edge would be 160 down here, and I would be playing it back up to this target. Now, me personally, I am already in a swing trade in NVIDIA. Okay. So I don't like to be too overly allocated in one specific area of the market. So I have no desire, honestly, to put on a new swing trade in this sector unless I was out of the NVIDIA trade. Now, yesterday I trimmed at 183.30 and my next trim is up here at 185. Above there, that's new all-time highs and Fibonacci extensions, and that final contract will be, hey, let's ride the wave up until either I run out of time to expiration or I get out because prices pull back below what would be the bull channel there. So I'm already in NVIDIA, but I wanted to mention these other semiconductor names in case you're not in this space at all and you're interested in the area. So AMD buying the dip at 160.03, I would set my stop as a lower low here. That would give you about a $2, $2.50 risk. Then on the way back up, I would be trimming at or around this daily 21, the price would be below, and then again at or near where the down move would begin at 170. So a risk of a couple of bucks here. Initial reward 5, 10, and then ultimately 16 to $22 of reward. All right. So that's an idea for AMD, AVGO. Let's look at the daily chart. This is the area that I have marked for a potential buy the dip. Um, it would also have a tight stop because it's based on this candle formation. I just moved this up to the lower weekly edge here on AMD. Now, look, a $2 stop on a swing trade for AMD is a little too tight. So you could use this gap fill here inside an up candle formation. It's been tested. You also have a monthly edge right there. That would be about a $5 or sorry, $9 risk amount, or you could use the daily 21. If price closes below that, then I'm out. That would be about $4.50 of risk. The initial resistance would then be this monthly edge right here. And remember, if I'm talking about a pullback here, the next candles have to look like this, which that would create an inside and down, giving me a reason to trim here anyway. And that's going to be about $8 above. So this would be about $4 to $5 of risk, then $8, and then targeting up here at 310.34, the all-time high. So that's my zones for AVGO. I already said I'm in an NVIDIA trade. Up next would be Taiwan Semis. These are the names I like to trade in this space. Taiwan Semis is in supply, obviously a tested zone. A pullback on Taiwan Semis, I would be looking for 231.42. That's the lower weekly edge, and I would just play it right back up to here. So if Taiwan Semis wants to continue chopping, the bottom of the chop is here, and that would be the buy. You can set your stop as a lower low in this chop that we have going on. So that would be about $3 of risk here. And the reward would be first, I'm going to, sorry, I can't quite, there we go. Okay. Um, the reward would be about $6. Okay. And then, of course, this upper zone back at the top of the chop. All right, so those are some semiconductor plays if you're not currently involved in a semiconductor swing. Also, I like to day trade these and typically have one of these on my chart to day trade each day. Next up, I just wanted to look at a couple of names in the tech sector that are the looking great as far as strength goes. Oracle is one of those names, and it is near a buy zone for me, 241.90 by 235.41. I would look at this as a buy opportunity or lower weekly edge here just for a trade to be in for the August 15th expiring contract. As far as targets go, you do have an upper monthly edge here at 255. So I don't know if you have the trendy indicators, which we do sell them at Simpler Trading, but if you have the trendy indicators, you can turn on the cloud and it will give you a zone based on that weekly uh, lower weekly edge. This is what last week's looked like. Now, note that once Monday opens and this edge is in play officially, you will see a cloud here as well. And you can use that cloud as your zone. All right. So the play for me off of Oracle would be just a shorter time play using the August 15th expiration, using the lower weekly edge, and then targeting the upper monthly edge by the upper weekly edge and then the all time high. I like this play for a short term swing on Oracle, given the chance Monday morning. All right. That's Oracle. Then we have Palantir. I mean, this thing, whew, I'm glad I own equity in it, is all I have to say because wowie wow. It's going, going, gone, guys. It's beautiful. Weekly edges, if you get a dip buy opportunity down here at this lower weekly edge, I personally will be a buyer. All right. And I'm going to create an alert there. Okay, just above this lower weekly edge. That'd be a gap fill down. Remember, how can you come up with targets along the way? Run your fibs and say, okay, it came down to the lower weekly edge, even though it hasn't yet. That would be part of your trade plan because that's what you're looking for the entry, right? So go down there and you choose. You want to trim at the top of what would be the bear channel there. You want to trim at the 618. You can choose. It's a pick your own adventure type book, right? Not everyone is the same. But just to give you an idea of a risk to reward, if I turned that cloud on, I'm going to guess that the stop is going to be somewhere down here for about $4 of risk. And you got an 11, nah, let's just say $10 initial reward. It's a nice risk to reward. Will it work? I can't say for sure, but it's a good risk to reward on a very strong name buying a pullback. All right, that's Palantir, the play that I'd be looking for. And then I told you on Cisco, they report earnings on Wednesday. And I would be looking for an earnings miss for this to be a play for me. My zone on an earnings miss would be down here at 68 to 66.98. Okay. That would be my buy the dip zone if Cisco pulls back into this zone. If Cisco doesn't and it has an earnings beat, these are my upside targets on Cisco. I'm not interested in shorting it. I personally am not, but these would be the targets on an earnings beat. I'm really got this on my watch list. in the event that it's an earnings miss and I wake up on Thursday and price is down near 68 or 65. All right. That's why Cisco's on my list, but earnings beat, these are my targets. All right. All right, guys, that is a wrap. You can see my whole swing trade list is very short. It is much shorter than what I typically am looking at. I am watching Ethereum, ETHA, ETF for it. Look right down here, a pullback down to here. That's a buy the dip. You will see if you're in the trendy room with me, you will see a swing trade for me on a dip buy down here on ETHA. All right. IBIT is it's struggling a little, but look, this thing, Bitcoin, is what this represents. Bitcoin made new all time highs recently. Ethereum was lagging behind it when it made those new all time highs. And now Ethereum is leading Bitcoin as far as the current price action. Well, it's kind of one of those things with crypto that you like to play what's hot. And what's hot right now is ETHA, and this is the dip buy for me. As far as targets go, immediate target, if we get a dip buy down here, is this upper yearly edge right here, the upper weekly edge, and then the all time high. Those are targets to the upside on a dip buy right here. Let's look and see. Gold, GLD, if you want to know my zones, I had this and wanted to play it all last week. I just didn't. My buy zone, let me show you. Was down at 309 area. I just didn't get quite the pullback that I was looking for. This is in a beautiful 4-hour squeeze right now. The daily squeeze, this is why I wanted in, is I could tell the daily squeeze was getting ready to fire, and it's actually fired 2 bars now. So yeah, I would still need a pullback in order to go long here. All right. All right. So that is a wrap on the swing trade ideas I have for next week. Let me just see who's in the room. Mike, good to see you as always. Mignon, good to see you. Ivan, Tim, Anna Marie, Joseph, JK. Daniel, nice to see you, my friend. Cece, oh, thank you. Appreciate you as well. All right. I am off to. Oh, there's my mama. Terry's my trading mama. In case y'all didn't know. Um, Good to see you, Mama. Hope you're doing well in hot, hot Arizona. I am sure it is scorcher there. As for me, my big plans today is to let my brisket just sit there and smoke while I am off to Kennedy Space Center with my friends. They have never been. So we're going to take them over to Cape Canaveral and go tour the Kennedy Space Center. Joanne, good to see you. Thank you. So that's my plans for the day. And then I'm going to come home and eat some brisket. So I hope y'all have a wonderful weekend. As always, thank you for joining me. Thank you for being a good support of Price Plan Profit. I really would appreciate it. Take 5 seconds, hit the like button. Please, please, please drop a comment. Let me know your wins from the week. Let me know what any struggles you're having. I would love to help out. I would love to celebrate with you your wins. Let's have a wonderful trading week next week. Until next time, guys, have a great day.